Billionaire hedge fund manager Paul Tudor Jones recently announced that his bet to hedge against inflation is Bitcoin. He also discussed his thoughts on gold and why he thinks inflation is something that you need to hedge and protect yourself against in this coming monetary environment. Let's dive in. What's up, everybody? My name is Joseph Brown, and this is Heresy Financial, and we are discussing Paul Tudor Jones today. He is a billionaire hedge fund manager, most famous for successfully navigating the stock market crash in 1987. Recently, Paul Tudor Jones announced that he was betting on Bitcoin to be the biggest winner as a result of the Federal Reserve's monetary policy. He discussed how the amount of money printing and credit expansion and easy money policies that the Federal Reserve is engaging in and allowing the federal government to engage in by monetizing treasuries, by doing debt monetization with government debt, should be extremely inflationary, especially on financial assets. Now, he also mentions gold and says he thinks this environment is going to be very good for the price of gold. But he makes a note that when you are trying to make a profit, it's better to bet on the fastest horse. If your main goal is making as much money as possible, then betting on something with the highest probability of a massive return is going to give you the best odds. Now, I've talked about this before because every single time throughout history, when governments engage in reckless monetary and fiscal policy, you see the same exact cycle play out. You start off with good, solid, sound money, and then you move to an exchange standard, and or the money starts to be debased through things like dilution of the actual metal or coin clipping, and that practice is very addictive. It gives the government the ability to spend more than they would otherwise be able to because they can extract purchasing power out of the economy without anybody really knowing, and it's very addicting, and so they have to continue doing this more and more and more until the whole thing unravels. There's a collapse in the confidence of the money, and then the society, the people, the economy returns to a sound money standard. It's happened hundreds of times for thousands of years. Now, Paul Tudor Jones is no newcomer to Bitcoin. Back in the last big bull run, right before it hit its peak at around $20,000, he got out of his Bitcoin position, and reportedly he about doubled the money that he invested into Bitcoin. So the speculation here is that when, not if, a crisis of confidence finally hits fiat currencies, what will people naturally and organically revert to? Historically, it's always been gold or silver. It's always been a precious metal. It's always been something with physical intrinsic value, something you can actually use and do something with. However, there's a really good argument to be made that Bitcoin operates better as money than anything that has come before, any fiat, any precious metal, any beads, any shells, any stones. Its monetary properties operate better on every box that you need to check off for something to operate well as money. And so there's a good argument to be made that there's a high chance that people will start to revert to using Bitcoin as money instead of fiat currency as money. Some of those check boxes that you need to hit are scarcity, the inability to counterfeit, an actual cost of labor associated with acquiring or producing more, easily settled. It works well as a medium of exchange. There's some sort of transaction infrastructure that's in place. And lastly, it would be relatively difficult or even impossible to destroy. So that's why things like rice and beads and shells, while they have operated as money at certain times in certain cultures throughout history, the vast majority of the time societies always will use some sort of a precious metal, especially gold and silver, because it meets most of those check boxes. And the more our governments start to impose restrictions and debase our money, steal our purchasing power by inflating the total supply of dollars and then redirecting those new dollars to the areas they see fit, in essence redistributing resources and transferring wealth through inflationary policies, the more government interferes with our money, the more and more people are going to be looking for alternatives. And so you have two bets here. People are going to revert to gold, or people are going to move on to something new like Bitcoin. If the world naturally moves back to something like gold, like it always has in the past, the purchasing power of gold isn't actually going to change that much. It's been in existence so long that its purchasing power doesn't really change over time. It's just reflected in the price of whatever currency you're using to measure it. The purchasing power of gold just stays the same for a lot of things and slowly gets better over time for others. And so even if everybody does revert back to a real gold standard where gold is actually money again, any gold you buy right now is pretty much just going to maintain its purchasing power. You're never going to lose purchasing power with gold, and you're never going to really make purchasing power with gold. It's a really good store of wealth. It'll preserve your purchasing power. Long term over time, that's what it does. It's what it's always done. It's very good at that. But if everybody moves to something like Bitcoin, the purchasing power per Bitcoin is going to skyrocket. It has to. The level of adoption right now is nowhere near what it would need to be for people to be using it, even to be a reserve currency of sorts, something to back up and do large net settlements of transactions. And so really what Paul Tudor Jones is betting on here is the risk to reward ratio. Yes, there's a higher risk that you lose everything you put into Bitcoin because it's less proven, it's less tested, there's not as much of a history behind it. But if it takes off, the rewards are immense. Versus something like gold, it's about as low risk, low reward as you can get. And it's important to remember that when we're talking about something's price increasing, we're talking about that price increasing in terms of whatever currency you're measuring it with. And so if gold's price goes up, that's simply long term, that's really just a measure of how much purchasing power the currency is losing. If the price of Bitcoin starts to climb extremely rapidly, if it doubles or triples or quadruples or 10x's or 100x's, that's more than likely going to be a result of new users adopting it and jumping on, and not as much of a reflection of purely the dollar losing its value. And so there's real purchasing power to be gained if the price of Bitcoin starts to accelerate upwards rapidly. Now, Paul Tudor Jones also mentioned what he thinks will happen to gold in this environment if Bitcoin skyrockets. He also thinks that that will be good for the price of gold. Obviously, it's again just a relationship between the value of what you're measuring, gold, and the value of what you're measuring it with, the dollar. In his estimation, we could see the price of gold go anywhere between $2,400 per ounce and $6,700 per ounce, depending on the amount of monetary expansion, dollar inflation that we see. Hope that helps provide some clarity into why a billionaire like Paul Tudor Jones is betting on something like Bitcoin and comparing that with his thoughts on something like gold, considering what the monetary outlook looks like at this point. If you enjoyed the video, learned something, please help me out. Hit that like button for the YouTube algorithms and the subscribe button. I appreciate you guys. Have a good day.